Okay, and welcome back, students who are taking financial accounting. In this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 8, problems, the Group B problems. Okay, let's see here. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And just as a quick aside before we get started, as part of this note, realize that you're building concepts upon concepts. So therefore, like for example, if you have to calculate depreciation, I'm not going to be covering the theory and talking a lot about the depreciation methods. That's something that you should already know. If you don't know that type of stuff, then go back and watch, go back and visit the chapters that pertain to that. Watch the theory videos in order to get up to speed. Because this chapter is, as we go forward, we're going to just build upon, give you the new information and discuss the new theory. Okay, I'm not going to keep on going back over the stuff that was that you should already know. Right. So with that said, let me go down to 56 here, which is what we're working on. It says here, Alvery Industries had a piece of equipment that cost $31,000 and had accumulated depreciation of $30,000. It says record the disposition of the equipment, assuming the following independent situations. A, Avery discarded the equipment, receiving $0. B, Avery sold equipment for $6,000 cash. C, Avery traded the equipment in on a new piece of equipment costing $35,000. Alvery was granted a $5,500 trade-in for the old equipment and paid the difference in cash. And D, Alvery traded the equipment in on a new piece of equipment costing $23,000. Alvery was granted a $500 trade-in allowance for the old equipment and signed a note payable for the difference. Okay, so let me get my pen here. When we're disposing of an asset, if you recall from the theory videos, I kind of looked at it in a basic three-step perspective. The first step is to take the old equipment off the books, right? So that's out. Right? Take the old equipment off the books. Then two, add the new equipment. So we're going to add the new equipment if new is necessary, all right? And three, you take the difference between the two as part of the journal entry, right? It's part of the journal entry for the gain or loss. Okay. Now, I mean, that's just an overall process, and this here again is where students will want, specific, look it up, cookie cutter, go back in the book and look up an exact situation and be able to find the exact journal entries that need to be made so they could just plug and play the numbers, right? Even though this here is a process or a thought process to deal with the concepts of disposition, all right, notice that we're being given 4 different scenarios here, okay? I can keep on going on and on and on and create a whole bunch more scenarios, okay? So you're not going to find every single scenario in a book. It's the whole idea of understanding, this process and fitting it to the particular situation. And by, this here problem is a good example of, the differences between each and every one, or how to go about looking at a specific situation. If you were, well, let's just do A here. If you went and you just, you had this equipment that was, the cost was $30,000 and the accumulated depreciation is $31,000 and the accumulated depreciation is $30,000, right? On your books, you're going to see equipment for $31,000 less the accumulated depreciation for $30,000. And so your book value here is going to be $1,000, right? That's what it's going to look like on your trial balance or on your balance sheet. Okay, so here for number one, it says Alvery discarded the equipment, receiving 0. So if they're discarding the equipment, we have to take the old equipment off. So equipment is a debit of 31,000, so we are going to credit equipment for 31,000. Accumulated depreciation is a credit. Well, we'll take that off. We're going to have to debit accumulated depreciation for 30,000. And then number three, well, that's number one. We took the old out. Now in this case here, number two, we're not adding anything new, so we're just going to skip it. Okay. Excuse me. But now number three, we're going to make a journal entry for the gain or loss. Well, to make my journal entry balance, I have to have $1,000 on the debit side here. So that has to be a debit to my loss on the disposal. And that's my journal entry. Okay, so I back into that gain or loss. I don't have to be memorizing, is a gain a debit or credit? Is a loss a debit or credit? I don't have to memorize so much the general ledger accounts, right? I just back into it. In this case here, there's a loss on the disposal, right? Because why? I'm getting, my book value is 1,000 and I'm getting rid of it. I lose that $1,000. So that's what makes up that journal entry. Okay. Right. So I'm going to erase this. And I know I'm going to rewrite parts of this because obviously I'm going to have to take the old out all the time. Okay. So Avery sold the, for B, Avery sold the equipment for 6,000 in cash. Well, number one, I'm going to have to take the old out. So I'm still going to credit my equipment for the 31,000. And I'm going to debit my accumulated depreciation for the 30,000. Okay. So I did number one, I took that off. Okay. And maybe I should do it like this. I'm going to do this in blue here. The old, I'm going to take off. The new, I'm going to do in blue as an add. And then 3, let me erase that. I'm going to do that in green. Three is the gain/loss to account for the gain or loss. Okay, so number one here, since Avery sold the equipment for 6,000 in cash, I have to take the equipment off. So that's number one. Number two, what am I getting? Well, I'm getting cash, debit. I'm increasing my cash, so it's a debit to cash for $6,000. Okay. That's what I'm adding. I'm adding what's new. And then number three, I have to account for the gain or loss. Well, I have 36,000 as a debit, and I have 31,000 as a credit. Right? Debit, credit. The difference between the two is 5,000. So that's going to be a credit for the gain on sale of equipment for 5,000, and that's my journal entry. Okay, just that simple. Okay, I backed into that portion. Right, so pause the video, write that down if you have to, because I'm going to erase it. So I'm going to get rid of that, and I'm going to get rid of this portion because as we deal with things. Okay, why did PowerPoint stop working? All right, let me see here. Give me 1 second here. Hopefully this will open up right in the exact same spot. Oh, and it is not. So let's get rid of recovery there. All right, there we go. Sorry about that, technical difficulty. All right. So sorry about that. I can't help for technical difficulties. So 1, hold, we're taking out. 2, new we're adding in, and then 3 is the gain / loss. I have my debits and my credits over here, right? And on my books, I was showing the equipment as 31,000, and then less accumulated depreciation for 30,000, which gave me a book value of 1,000. Okay, so we're back to where we were. I had a credit to equipment because I'm taking it off, 31,000, and I had a debit to accumulated depreciation equipment for 30,000. Right now, number C says Avery traded the equipment in on a new piece of equipment costing 35,000. Avery was granted a $5,500 trade-in allowance for the old equipment and paid the difference in cash. Okay, so one, we're going to take the equipment off of the books. So this is equipment old, and this is old. Now we're getting new equipment, okay? So the new equipment costs 35,000, so I'm going to debit equipment new for 35,000. Okay, and now we have to deal with the excuse me. We have to deal with our cash situation. Avery was granted a $5,500 trade-in allowance for the old equipment and paid the difference in cash. Well, if the new equipment costs 35,000, and he gets a trade-in allowance of 5,500, that means he's going to pay cash of 29,500. So I have a credit to cash. Oops, down the wrong. Let me put that down here. A credit to cash for 29,500. I'm sorry, 29,500. Okay, so that's number 2. I added whatever I needed to, as far as the new is concerned. Now let's look at number 3, the gain or loss. Well, on my debit side, I've got 35 and 30, which is 65,000. And I've got 29,500 and 31,000. So that's 60,500. So the difference between those two is $4,500. Okay, so that's a gain on the equipment. So I'm going to credit a gain on exchange of equipment for $4,500. Okay, and that's my journal entry for C. Okay, so go ahead and pause the video because I'm going to erase this. Okay, I'm back here erasing, and again, notice that it all depends upon the situation that's occurring. That determines what my journal entry is going to be like. I'm following a process, but I'm not following it blindly, just trying to plug and play numbers. As I said, I can create a gazillion different scenarios here, and no two are going to be alike. But if I follow this process, I can always make the journal entry. All right. So let's see here. D says Avery traded equipment in on a new piece of equipment costing 23,000. Avery was granted a $500 trade-in allowance for the old equipment and signed a note payable for the difference. Okay. All right. So number 1, right, we take off the old. We've already done that. Right. Now number 2 is the new. Right. What are we taking for new? Well, we trade the equipment on a new piece of equipment costing 23,000. So I'm going to debit equipment new for 23,000. Okay, so what else am I getting? I have Avery was granted a $500 trade-in allowance, right, for the old equipment and signed a note payable for the difference. So if the equipment cost the new equipment cost $23,000 and we're given a $500 trade-in allowance, the difference is $22,500, and that is signed a note payable. Okay, well, our note payable is going to be a credit. Why? Because we increase notes payable as a liability, and we increase our liability on the credit side. So note payable is a credit for $2,500, right? Excuse me. So now here's just a quick aside, and we've gone through this here concept before. A note payable. Well, when you're making a journal entry, you have to think about what category the note payable is. That's a liability. And since our note payable went from 0 and it's increasing to $22,500, that's an increase, and we increase our liabilities on the credit side. So we have a credit to note payable for $22,500. Okay. Now the last thing that we need to do is we need to look at the gain or loss, right? So I've got $23,000 and $30,000, so that's $53,000. Then I've got $22,500 and $31,000, so that's $53,500. And the difference between the two is $500. Okay, so that is going to be a debit, right? Because remember, the credit side here is greater, all right, than the debit side. So I have to debit for $500. So I'm going to debit the loss on exchange of equipment. The equipment for $500, and that's my journal entry. Okay, right. So that's it for this particular problem. Okay. Again, if you don't understand something, pause and rewind the video, watch it again, and just realize that we're not like this here, like in this particular case, the note payable. That's an old concept. You should already know that. So building upon the new concept is the disposing of the assets, okay? But it's not a, look it up in a book kind of thing, okay? I could have just as easily created an E, an F, a G, an H, and just kept on going with different scenarios. But they all kind of follow in this same thought process that I use to make those particular journal entries. Okay, so I take off, the old equipment, I add anything new, and then I look for the difference between the gain and the loss. And as long as you follow that process, you should, and you kind of mimic making these journal entries, you should have no problem making the journal entries. So if you still don't understand something, go back and watch the theory videos, because I cover it again. Watch some of the other exercise problems, because it was covered there. And again, pause and rewind and watch this video again. And if you still don't understand something, feel free to contact an instructor. Okay?